Welcome traders, and in this video we're going to be looking at our daily trading routine. So traders obviously are going to have different trading routines based on their trading style, the certain trader that they actually are, and how much time and dedication they are inputting into their trading career. So essentially the trading style that I've developed over time, and a lot of our traders have developed over time, is a slow and relaxed method. So we allow ourselves to live our life in other areas. We're able to do other things, other activities throughout the day, whilst being able to manage and effectively run the trading business. So really, before we actually get into the actual the technical chart and actually the trades, placing trades, closing trades, etc., you do really need to get mentally prepared and be in a positive place when you do start trading. So when you do start trading, obviously you want to be mentally prepared. You could do this either by potentially yoga, meditation, nice calming relaxing music, nice environment, perhaps even get a nice drink, a nice coffee, and get yourself into the right mood so that you're actually trading from a optimum level. It's the worst thing to actually being behind the screen when you are in a bad mood or you're trying to revenge, and then you actually take it into the markets where you want to be at a very neutral level. You want to be quite robotic when it comes to your trading style of actually viewing the market. So it's nice to actually get mentally prepared, even if you're not a spiritual trader. Using activities like I say, yoga, meditation, is very good to actually just calm yourself, relax the mind, and then we can actually start to approach the trading in a positive mindset. So once we are actually in that state of mind where we are ready to tackle the markets, we can then start analyzing the charts, finding the best confluence setups, and then being able to actually identify key trades to actually place on our account. You also need to have a trading plan obviously in place way before that you start placing trades. We need to understand exactly what we're going to be risking, what we want to actually achieve out of the market, and then our basically ambition and what we expect to happen. The market doesn't control the account, you do. So you want to be fully in control of your account. As we've shown before, a lot of our traders who have actually been able to go through the trading levels, reach their targets and get those payouts, they've been able to effectively control themselves, their own emotions, and then not let the market control their account. So being mentally prepared, getting ready for the trading day ahead is key, and then we can actually start analyzing the charts. Okay, so once you've actually found your setups, you've been through your plan, you've found all of the trading rules, criteria. Let's say you've got a certain setup on the euro versus the dollar, for example. You can see a perfect sell position. Then it's time to actually execute the trade. Now, we've mentioned before keeping different charting platforms separate. TradingView, perhaps a lot of the traders use TradingView to actually do their markings, markups, chart work, and the more creative side of trading. Then we can hop over to MT4, place those trades. Typically I like to place the trades usually on the morning, and then let the trade breathe throughout the day, and then I'll monitor sort of end of day data, see what's happening towards the end of the day, and then potentially manage your trade around that. But any time of the day where you feel like the setup is sufficient enough to actually place, you want to then get involved with the market, but only when it actually meets your requirements. Make sure the trade does actually come to you and you're not just picking the trade out of thin air or trying to hone in on some short-term luck. So ideally throughout the day, we want to be placing these trades and monitoring these trades. So throughout the day, if there are news coming out, make sure you do use your own market judgment, your own initiative to actually find out what's happening, how severe the news is going to be, and then manage your trade around that. Monitoring positions can also look at key levels. Perhaps you want to modify or adjust a take profit zone, a stop loss zone. We don't want to be widening stop losses, though. We don't want to increase the amount of risk that we're applying to the trades. And we want to, as soon as we place a trade, ideally keep those levels in place until either we get an outcome of loss or profit. However, monitoring and staying light on your toes and looking at the different biases in the market will, you can actually get a bit of an extra edge and initiative on your own trading plan when you do monitor your trading setups. So you do want to spend a bit of time, a portion of your day, monitoring the trading setups, placing those trades. Only a small period, but it is going to be very effective in the long run. Now, when it comes to actually your trading edge as a trader, it is very difficult to actually become a profitable trader in this market because it is very brutal, very, very volatile. Prices are fluctuating up and down quite a lot, and there can be quite a lot of manipulation when it comes to chart work, giving traders false signals, and sending traders off, the right paths, which can then, lead to negative emotions, negative effects on their overall trading account, and then it can go downhill very, very quickly as a trader, as many of us have experienced. So what we want to be doing is we want to be actually enhancing our edge using trading journals. So we want to use a trading journal throughout the day, whether it is just a Word document on your computer, or even better, an actual notepad and pen beside your computer on your trading desk. So you can always, use it, log the dates that you're actually trading, and then you can go through and write down everything when it comes to chart work, emotions, risk management, how you're feeling. All of it you want to be logging and using as data, as ongoing data, so you can actually keep on building yourself into a better trader. And as I say, this edge, we always need to be looking to find edges in the market where we're going to be able to increase our win rate and then increase the overall profit that we're taking out of the market. So any way that you find an edge, whether it would be getting into the trade, coming out of the trade, finding the trade, we always want to be looking back on the recent trades and then seeing what we can improve. I also like to educate myself on market data. So even though fundamentals don't play a huge role in the overall realm in terms of key levels, psychological levels, and what's actually happening beyond the manipulation, there is market data that we can actually look at and then perhaps even find an edge through that. There are fundamental traders out there that do just trade purely off the fundamentals and are doing very well out of it. They're looking at employment rates, interest rates, what's happening in certain countries, and the overall retail sector as well can have a big impact on the individual currencies and what's going to be happening day by day in the market. And then just overall general patterns, we want to be making sure that we're looking at the patterns, recognizing the patterns, and then allowing them to repeat themselves, because they do repeat themselves. History repeats itself over and over again in this market. So we want to be identifying the patterns and then adding that to the journal, or educating ourselves to better our edge so that we can identify those patterns in the future. And finally, the end of day data. Usually around market closure, I do like to spend just a bit of time, perhaps even 10, 20, 30 minutes just behind the screen, looking at what happened throughout the day, look at the watch list. I do only have a small sample of trades on my watch list to actually see what price closures have happened. Is there been positive or negative impacts on the currency pairs that I've been looking at? How's that reflected onto my trades? Look at the percentage growth or loss on those currency pairs, and then identify whether I should be closing trades early or perhaps looking actually to get into the trade. There are times where the market will actually close from the next daily candle will open. That will also provide another trading setup potentially, and there are many times where I will be placing trades that late at the day if the sufficient data and entry requirements are there and there's enough confluence for me to get into the market. I'll look at the closures. We also want to be looking at closures on a smaller time frame as well, on the hourly and the 4 hour. Obviously, if you are trading midday and you need some more confirmation, for example, a breakout, trendline breakout, a box region breakout, key level breakout, you need to be looking for those closures. The breakout, retest, continuation, a continuation, but an actual break below the continuation levels as extra confluence will enable those better trading setups. More probable trading setups is what we want to try and achieve. But looking at the end of day data is just something that I've done from the early days, really, because I've been quite actively involved, looking at spending many hours behind the charts. As I've got more profitable over time, I have actually spent less time behind the screens, because you don't need to spend all day looking at the charts. You know, we're not all of us are, you know, super scalping trades where we're going to be sitting behind the screens 10-12 hours a day looking for each and every individual movement, trying to capitalize on every micro movement. Being a profitable trader, especially for a prop firm, requires more long-term outlook and a long-term vision when it comes to actually placing your trades. So, you know, if you do obviously sign up for a funded account with, let's say, the low risk program, you do only need to achieve 10%, and we give you 90 days to achieve that. So if you break that down, you really only need a few, you know, 2 or 3 trades a week really is sufficient enough. We've seen many traders come through, place that amount of trades, and be very successful. So yeah, it's just all about keeping the emotions in alignment and being very relaxed, and trying to flush those negative or, you know, let's say, you know, bad behaviors or revenge trading out of our systems. Be very neutral, be very robotic, try and place good trades over and over again, and then yeah, become a better and more profitable trader. So that's it for this episode. It was just a bit of a brief recap of our daily trading routines. I hope the information has helped. Be sure to stay tuned for more blog videos to come, and trade safe.